As the crypto investment world is blowing up, many people are questioning about other assets, especially the traditional ones like gold and silver. They are asking if these will become irrelevant. They want to know if these will lose value, and the answer is no. In fact, they will probably grow.
They'll jack up margin requirements, and then they will just cash settle. They'll force majeure. They'll change the rules the way that they did other.
And if you look close enough, you can already see it happening in the sense that the value and demand for silver is at an all-time high right now. If we talk about silver, you can say that this might be the only investment or asset class that currently has huge demand on either side of it, be it investment or utility. On the other hand, where we have the massive investment demand, which is growing even larger by the second, slowly expanding to levels that have really never seen before and are much more than anything of us have ever seen in terms of investment demand, bringing in an effect from all around the globe. On the other hand, there is also an expansive demand in the industry world over. One of the most prominent is the fuel and utility industry, where sustainability is now becoming a priority. One example could be Biden's Green New Agenda, which has encouraged industries to move away from using fossil fuels and combustion engines on the large basis that it creates a considerable amount of pollution, and instead lean more towards clean and green energy sources such as solar panels, windmills, electric batteries, etc. The demand for these is growing manifold, especially with initiatives and projects like Chinese Belt Road and Rail Initiative, only the largest infrastructure project ever taken up in human history being carried out right now.
Imagine it's Bitcoin, and the largest Bitcoin holder that there is, if at 50,000 he says or she says, I need to take some profit, dump it all. No, that's not what they would do. They would slowly sell, sell $1 million worth here, wait a few hours, sell another $1 million, wait a few hours, sell another $1 million, wait a day, sell 10 million.
Where the aim is to connect a whopping 65% of the human population between Asia and Africa with a single massive network. It is not just the maritime channels and bridges and roads, it's also about the technology that is connecting these people digitally, which in and of itself has a massive implication for silver, as this is the metal that is running in continual deficit with students in mind. Silver supply last year was over 300 million ounces. This is an asset class that is found in nature in a form called epithermal, very close to the surface. But the problem is that now, after so many decades of constant utilization, all of the bigger and massive deposits are gone. They have in fact been gone for years, so much so that the globe mine supply right now is actually running at 200 to 300 million ounces short every year over the last few years in terms of supply versus demand. And what you have coming out of the ground globally is about 8-to-1 ratio now, but being sold at nearly 70-to-1 ratio. So you can clearly see that the demand keeps increasing while the supply is limited. So when you talk about an asset that not only has demand from an industrial side, but from an investment side, as well as a Federal Reserve that is trying as much as possible to solve all their financial problems by printing money constantly, while also capping nominal interest rates, making real interest rates decidedly negative, you could not have a better environment for an investment that is not dependent on the value of money, whether it be industrially or whether it be just what's going on in the state of affairs with the currency and the economy. Silver thus becomes a buying opportunity of a generation. You could say that these pullbacks that we're seeing, as counterintuitive as they are, should not be viewed as nothing other than a subsidy and an opportunity to add to people's positions in the investment realms. It is honestly a gift because the prices are not justified by the level of demand. We have been talking about this for a very long time, and now it is finally happening. This is an awakening of a lifetime, a realization that in the current financial environment, you cannot afford to forget or ignore. Remember, the amount of gold and silver out there is a very tiny market. And if we start growing the 1% to 1.5% or 2%, you're talking about doubling or tripling or quadrupling of demand in an industry that for 40 years has not been prepared for it. And so when you talk about high premiums, they're as high as we've ever seen, which is indicative of the rising demand. You're beginning to see it globally now. Companies are falling short, and as a result, there are rumors that the Perth Mint not being able to deliver. There's rumors of the UK Mint not being able to deliver. You're seeing metal taken off all the exchanges. You're seeing a concerted effort to gather metal and to take possession of it. What's going on in the COMEX? What's going on in India? What's going on in Shanghai Gold Exchange? The LVM, a door to the ETFs. All of them have one thing in common, and that is metal is being pulled away by the most sophisticated money in the world.
When you talk about silver, it might be the only investment or asset class that has demand, huge demand on either side of it. On one end, you have the investment demand, which is growing and expanding to levels that I've really never seen before, much more than anything any of us have ever seen in terms of investment demand. And that is having an effect from all around the globe.
And as it trickles down to the 1 ounce arena, you have an expansion of interest. But you also have not just by the little guy, but by the big guy too. And the big guy is draining the shelves from the top down. Whether it be those announced Burzon, Cemex, or just going in and making large purchases from dealers around the globe, it's becoming harder and harder to get. The end result is much higher premiums. That would most certainly affect the little guy, and that's why you need to buy on the dips. Don't chase the rips, buy the dips as much as possible. If you can buy 1 or 2 or 3 ounces and put it away, do it. Because what Wall Street is doing is waking people up one by one. And that's how you beat the COMEX. That's how you win. You don't beat the COMEX by trying to create a run on it, because they'll just change the rules. They will first jack up a margin requirement and then they'll just cash settle. They'll force majeure. They'll change the rules the way that they did, although just make it illegal to go along like they did on the Hunt brothers. They will change the rules the way that you win. Whether we all win is by taking 1 ounce off at a time in gold, in coin in bar form, so that there's nothing left anywhere. And that will have an effect as it spills over into the COMEX. It will wake people up. It will wake other hedge funds up that, hey, they'll smell blood in the water. This is an asset class that has so many bullish traits to it, and there's nothing to be found. So ask yourself, in the midst of that kind of craziness where everyone's shutting down, more money is going into the ETFs than ever before, who in their right mind would dump that kind of amount of silver in between the markets closed in London and open in New York, guaranteed to smash the price by over $3 and offer the worst possible execution in that environment? Imagine it's Bitcoin and the largest Bitcoin holder that there is. If at 50,000 he says or she says, I need to take some profit, dump it all. No, that's not what they would do. They would slowly sell, sell $1 million worth here, wait a few hours, sell another $1 million, wait a few hours, sell another $1 million, wait a day, some $10 million. You don't dump it all. Wait, have patience, and you will win.
Silver, to me, is the buying opportunity of a generation. And I say that with 100% sincerity and objectivity. And so I think that these pullbacks that we're seeing, as counterintuitive as they are, should be not viewed nothing other than a subsidy and an opportunity to add to people's position. It's a gift because the prices are not justified by the level of demand.